Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Polygon Matic. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one so that you have more context. It's going to be linked in the top right hand corner of your screen. Also, I do want to let you know that I have two donation links down below in the description if you want to support Ukraine financially, and if you have the ability to do so and you have the desire to do so, then feel free to go over to the official websites I linked down below and you can donate directly to the funds. So thank you all for watching the video. Let's get straight into the technical analysis. So for Polygon Matic right now, we are holding the support of the 55 EMA here, which is the red, as you can see, line. And this is a very important level for us to hold, because if we stay above the 55 EMA, at some point the 20 EMA is going to cross above the 55 and we're going to get a bullish cross. And that would be a nice confirmation for another move or another leg up. So potentially if I get my fib retracement here from this low, let me get the fib, from the low that we printed today towards the high that we had just a couple of days ago, we're going to be looking at an 89% Polygon Matic potentially, right? If you get the bullish cross, you break this swing high at 86 cents, you may see an impulsive move towards 89 cents. And from where we are right now, that would be a nice 9.2% trade. So that's an if. Obviously, a lot of times what happens is that as soon as we are about to get the bullish cross, what ends up happening is we have an EMA squeeze. So the 20 EMA squeezes off of the 55, it repels itself off of it, and then it comes back down and the price comes down, obviously. So this is just a way for market makers to make you feel like the bullish cross is coming. So you're going to enter here and obviously the price dumps afterwards. And a bunch of people are going to open up long positions. Well, that's basically how it works. I'm not saying that that's specifically done by market makers in this situation, but Polygon Matic is quite a popular project and it has lots of partnerships. So I would imagine a lot of big money is looking into this project. So I would say that if we see another pullback, and I do think there is going to be another pullback, I would target this price over here at 74.5 cents. The last time I gave you this support, we bounced off of there. We did have a move below, obviously, but we went above that and we bounced from there, and we had a nice 15.7% trade potential here. So if any of you traded that, then good for you. But for now, it looks like we are done with this move and we are going to be coming back down. Potentially, what you're seeing here is a nice channel up pattern, and we're potentially going to lose that. And usually you lose channel up patterns and you come back down to retest support trend lines. So yeah, the first immediate support is going to be here at the 0.382 Fibonacci level. And obviously you have your fib from the last video. So this is our swing high here, and the swing low is all the way down here. And that just gives us the 0.618, the golden ratio at 50 cents. So these are some of the levels that you want to be looking at. Obviously, if we see a major capitulation and Bitcoin drops below $14,000 or below $15,000, I actually think 14 is going to be the absolute bottom if we start a capitulation, then Polygon Matic can obviously come back down to the lows here that we printed back in June. And for those of you who don't know, since June we made a 200% move for Polygon Matic. And yeah, we were entering Polygon on this channel, so my average buy-in price is at 44 cents roughly. And as always, all of my trade alerts can be found on my Patreon, and the link is in the description. So yeah, that's regarding the daily chart here with this fib retracement. Obviously, if we start zooming out, we have a different fib retracement. So we took the swing low in June and we took our swing high in December last year. And this gives us the golden ratio at $1.25. So if we end up having a relief rally towards November, just like we do, or just like we did for the past 3 years, then, and this year is no exception, well, in that case, I may see a move all the way up to $1.25, where we actually reject this previous support zone as resistance, and because we haven't done that yet, right? You lost this level here in April. You haven't come back to it and retested that as resistance. So that's why I'm saying this is something that you want to keep an eye on. So anywhere from $1.25 all the way up to $1.41. That's a nice potential trade for you there, because we came back down to this level in January, in February, in March, in April, and then we dumped down here at the end of April. So yeah, that's why I'm eyeballing this level. If we run into that level and you get overextended on your RSI, that's going to be a good indicator for you to start taking profits and potentially have a nice swing trade at your hands. Moving over to the daily RSI, as you can see, we are breaking out of this symmetrical triangle here, and we're coming back down to potentially retest this white trend line as support, or the yellow trend line, okay? So the white trend line has been retested multiple times as support when we were above it. Obviously, there were some fake outs, like the one over here at the beginning of September, and you had some fake outs above it when you were below the trend line. But for the most part, you do bounce off of it, and it plays a nice part. So if you are looking for re-entry and you feel like Matic is going to have a nice run towards November, you can enter off of the yellow or the white trend line here. Obviously, you break a resistance, you want to back test that as support. So let's see if you get the bullish cross as well. That may be a nice indicator, but still in a bear market, bullish crosses on the daily chart aren't the best indicators to trade off of. I would say the weekly chart, the 3-day chart, the 5-day chart, those would be better to look at for the midterm trading. But like I said, yeah, you just don't know what the market is going to do. So you have to be ready for both outcomes. That's the motto of this channel, and that's what I try to teach you guys. So for me, I'm not entering Polygon Matic, and if we do have a nice move to the upside and we get to these levels, I'm gonna take some profits, because I do have a portion of my tokens staking, and I do have a portion of my tokens in my wallets, and I can just sell that at these prices and buy back in lower. That's something that I'm going to be looking at, but I'm definitely not selling in this area, and I'm not buying in this area. So once we start coming back down to around about 50 cents, that's when I'm going to be accumulating more Polygon Matic coins. Now let's switch over to the Binance website. Okay, switching over to the weekly chart here for Binance, as you can see, we are running into this multi-month weekly resistance, and you had multiple run-ins with this pattern here. So let me just get that and change that to yellow. There we go. So as you can see, you did have multiple back tests of this level as resistance. So you had one back test here in January, another back test in February, another back test in April, another back test in August, and another back test in September, another back test in October. So if you finally break through that trend line here in October, that's going to be a very bullish statement from Polygon Matic on the weekly chart, because you're breaking through a major multi-month trend line. And typically when you break through a major multi-month diagonal trend line, you typically see a move to the upside, a rather nice bullish uptrend. So there is always the potential that we may run into the 55 weekly EMA, because that's our next major resistance level that we haven't retested in quite a while, since April this year. So potentially, if you start breaking to the upside, you may run into the 55. But as you can see right now, you're getting rejected from the 20 EMA, and you have the light blue trend line there as well. So lots of resistance there. On the weekly chart, you're breaking through the falling wedges resistance, which is a good sign. This is a good sign, but keep in mind, this has to be confirmed by the price action. If the price action doesn't break through here, and the RSI does, which is, it already is breaking, I would not, sell, because you need the RSI to be confirmed by the price action, okay? Because if the price action isn't going to break above this resistance, you're just going to continue back down, and potentially you may even come back down to this low that we printed here in June, which I'll be eyeballing around about 40 cents as the bottom, because this is a very important level for us. And potentially you may even come back down for a nice double bottom pattern. Okay, you may come back down here. Let me get the brush fixed up for you. There we go. So you may come back down here and retest that level. That always could happen, and just be ready for anything. Just because we're up here sitting at 80 cents doesn't mean that we can come back down here and retest 40 cents. Yes, that's a hefty 50% pullback, but that would be a great entry point for any of you looking to buy Matic. So that's pretty much it, guys. Thank you all for watching. If I missed out anything important on the charts, please let me know down below in the comment section. Feel free to follow me on Twitter. Feel free to join me on Patreon. I'm going to catch you in the next one. Goodbye and good night.